Friends, as we have heard from Chiklesh sir, that a lot of development is happening in accounting front. We'll not talk about the auditing. In auditing also a lot of development is happening. But now the topic is from the point of view of financial reporting excellence from the perspective of the preparer. So as a preparer, accounting standards and accounting framework is very, very relevant. And as we know in last 5-7 years, there is a lot of dynamism every day and day out, like as sir says, every year a lot of changes are coming in accounting standards or some other framework. And secondly, as a preparer, if you are a listed company, then your challenge is, apart from accounting standard, you have multiple regulators. If you are NBFC and if you are registered under the Companies Act, so you have the MCA is one of the regulator. Secondly, you have RBI as a regulator. Then since your accounts are being prepared, they will be subject to FRRB, NAFRA. So because of this, complexity in short is increasing day by day. And that makes even more challenging how to prepare the financial statement. And further challenging when you want to comply and excel in preparing the financial statement. So we'll discuss the scenario, the way forward, etc. We have two panelists with us. So we'll start with first questions as to what are the essential building blocks of financial reporting excellence from the preparer's perspective. Hasmukh bhai, if you would say something.
Good morning. The first session is preparer's perspective. Irony is that none of three of us sitting here are preparers. I would like to know in the audience if there are any preparers. If you don't mind, please, yeah. So we'll have a lot of inputs from this one or two gentlemen who said they are preparers. We, in fact, represent the auditing fraternity, and Paresh bhai also, represents audit committee chair position kind of this thing. So to that extent, one can consider a preparer's perspective. Chitlesh sir rightly said that something which is changed every year cannot be a standard. Standard has to be some stability, and therefore, if that stability is not there, our obligation of complying with this enhances, and therefore we have to be kind of always heightened. And am I audible? Yes. Yeah. So the question was about essential building blocks. To say that first of all, what is if I say I am tolding you to sit calmly, but you will not listen to me. Is that sentence made any sense? There were several errors in that, right? But message was conveyed. This is what Chitlesh sir also mentioned. Precisely, accounting standard lays down the grammar of a language of accounting. If grammar is right, ultimate result would be right. And from that point of view, if building blocks were to be prepared, obviously what you need is some of the basic things. I don't have to tell that. The robust internal control over financial reporting within an organization is the first fundamental need. The vibrant communication between the finance accounts and business and operations. Now this is an essential necessity missed out in many organizations. Many a time business is totally devoid of what is getting reported in the financial. Some transactions, some deals, some contracts are entered into by business. Finance has been told to account for it without knowing the nitty-gritty, without knowing the business commercial sense, and therefore when finance does it in own way, within the framework, tries to be in framework, as Chitlesh sir said, what is not prohibited can be done without seeing that. And therefore that missing link of communication between business and finance, if they are not together, they are not working as a team, some of these anomalies can arise, which we are seeing in some of the financial statements, which are seeing in some of the publicly available goof ups in the financial reporting. So therefore, I mean, all these teams working as one team, not working in silo, is one building block, Nikhil bhai, that I would suggest. Cultural and ethical behavior, I think enough has been spoken in the inaugural session. Ethics cannot be devoid of accounting standards, as also financial reporting. A long career company or long interest companies normally do not want to compromise for a meager benefit, temporary benefits of accounting, and therefore ethical behavior. And then constant learning and development. Within the organizations, people who are interested with the reporting this thing, if they are not aware of some of the things, obviously the result would not be. If they are doing what they have been doing and there are changes in the situation. I'll just take an example from Chitle sir's this thing only. He mentioned that what was the need to change standard overnight, what we were doing till yesterday, if it was not gravely wrong, then why not continue it for some years, and then after giving time, 3 years time. So one example that comes to mind immediately is that internationally the standard seems to have been given away, the percentage of completion method for the builder developers accounting. Now the way Ind AS 115, the revenue from the customer contract is kind of structured. In contrast to earlier Ind AS 18 revenue recognition, the percentage completion method is perhaps not favored. There are so many conditions, stringent conditions put to be able to do and follow the percentage completion, and therefore we are seeing the entire builder developer fraternity, those who are in listed space, are moving to a completion method. That's what has happened internationally. This change was brought in overnight. Hitherto, percentage of completion was preferred by the accounting fraternity, not so preferred by regulators, etc., because of the several assumptions, judgments, etc. So these are some of the examples that the preparers will have to kind of have a constant learning and development initiatives within the organization, take the help of external parties, experts, their auditors, their audit committee chairman. One important aspect is I said about a communication channel with others in the organization, the business and the operations and the service part all. Also, a regular communication or seeking a guidance from the audit committee, especially audit committee chairman, about his views on any change of any reporting pattern change or any. Suppose you are changing a draft in a already published accounts. If you are changing that, I mean, circulate it before, have blessings of the audit committee also. If there are some changes suggested, please follow that. That will take you towards a qualitative reporting. These are my humble views. Paresh bhai, if you would like to add something.
Yeah, sure. I think at the outset, let me thank WRC and the Institute per se to, have me here. As Hasmukh bhai said that none of us are in space of industry. So, Hasmukh bhai, I remembered my school days when on a teacher's day, the students were made teachers. So today we are doing a role of a CFO, and so we had to make a preparation in a manner that we are sitting in a CFO's position and answer your questions or Nikhil's questions. Yeah, so for building blocks, I will briefly, as I think Hasmukh bhai has elaborately said, 3 things I'll say. What is required? The preparation wise, what is required is most important. That is your standard requirement or Schedule 3 requirement or the financial statement, all sorts of disclosure requirements is the first thing which one would have to look at. Now, as Hasmukh bhai said, you know, sometimes what it's not walk the talk kind of a thing. So what I would say is that what is required has to be studied and written or disclosed, and all the way along should be implemented. So walk the talk is very important. You know, sitting here also what I am saying, whether that is what is being implemented. So as far as the company preparer is concerned, their preparation has to result into their financial statements reporting, as well as all the disclosure should come about. And as Hasmukh bhai pointed out, internal controls, maker checker, all these things also will have to be there. And communication. So communication, even including interdepartment communication. And you start proactively. All these communication needs to start proactively. Take an example that there is a major plant which is installed. So the capitalization which one has to deal with. So the moment the plant is installed, your capitalization concept, which expenses would be capitalized, how exactly it would be capitalized, trial run, commercial production run, all these things are not to be discussed or crystallized at the end of the year. No, the day it is done, the commercial production started, all these should be really dealt with. In fact, last year only we were dealing with one of the large corporates for capitalization. And there were about 10 plants started. Because it was the new product line altogether they started. Now each plant was starting at a different dates and things like that. But I know that they started communicating, not internally, to the external agency, auditors, tax consultants, right from the day one, you know, even before their installation and all was started, or their projection was. So that is what which I would like on an industry side to work on. And for that, of course, the training and all that will have to be there.
Yeah, as you both of you have rightly pointed out, that preparers are the one who prepare. So unless they are up to date on the accounting standards, they cannot prepare it correctly. So being a qualified, they know the accounting standards. Now what happens, like our experience on the other side of the table when we are dealing with the clients, after a few years they become a lax. थोड़े relax हो जाते हैं. New changes which are coming, they don't keep themselves aware of those changes. So when we go for the audit, the first thing I tell them, you are being a member, you are getting CA journal first of things. Last 12 to 15 months journal up ले लो, go through those amendments, whatever come through. Now out of that, all may not be relevant to you. So whatever is relevant, have you implemented or not? If you have implemented and accordingly you have prepared your financial statement, obviously your financial statements are correct. Now, if amendments you have not considered to that extent, that could be a flaw, if it is applicable. And sometimes there is amendment, but not applicable to you. So by default, your accounts are correct. So then another thing we have to tell them that, okay, whenever we have the training, I mean new accounting standard, etc. comes, we have various seminars, and now as you know, because of CP hours, we have so many now study circles. So accounting staff, we request them, whichever study circle is near to you on the relevant topics, please go and attend it. So that keeps themselves aware of the latest developments and how they have to implement. So now further corollary to this,
Just one sec. I will just make a macro level statement. So, you know, they should audit their accounts first before they give it to auditors. So that's the punchline, you know. Audit the accounts first before you give it to auditors. That is what, as a CFO or an accountant, I would like to do.
Yeah, because as a preparer, many times the tendency is what? Auditor baithe hai na, jo bhi galti hogi, they will point out. So junior ने जो भी बनाया है, they will not review it. जो बनाया, he will orally ask, ये सब कर दिया, junior will say yes, I have done it. Then it is given to the auditor, then auditor finds the flaws and then gets rectified. So it's a lot of wastage of time. So if he goes into the process as to what changes we have done, etc., then they will be spending less time on the correction. And this also is very, very important because now, as you know, many listed companies, they have very less time gap between the year end and then a board meeting for final audited accounts. So time is very, very essential. So wherever they can save the times, it will help them in excelling in their preparation of financial statement. So further corollary to this is how to ensure completeness and compliance with Ind AS while preparing the financial statement. Hasmukh bhai, your thought? Hi. नहीं ऐसे नहीं. Like for example, we are still a part of Vile Parle study circles. In our study circle, we allow non-CS also, articles also. Many times, no, non-CS also we allow. Like sometimes we conduct program. For example, let's say on 27th we had like preparation of financial statements for financial year 24-25. Those important things, out of which few amendments were there. Rest of the things were the important points we should consider, etc. So at that time, we tell our members that we encourage your staff to come. Now, staff may be article, maybe non-article, because nowadays many people have BCom, etc. As a staff who are using. So we in fact encourage them, and many times, like at our BCS also and our WIRC also, we have program on updation on the income tax, etc., which we have the sessions. Actually, this is not for only CS. It's more for staff of the CS, which could be either article, qualified, or even non-article, I mean, not doing CA, etc. Yeah.
So when I said, sir, learning and development initiatives, those can be in-house also. You can, within the organization, have a study circle meeting, call some experts, call your auditors, call your this thing, and that can, you know, there is no such restriction. All can. So, I know. So these challenges are there, and wherever there is a quest for this is there, obviously there are ways and means. The question was about
in fact, there's nothing better than self-learning.
the question on completeness and of the compliance. Now this is very tricky. This thing, you know, like. In a constantly changing world, somebody, a CFO of a MSME, this thing, who has, you know, like a small team, 8-10 persons of account, somebody doing GST, somebody doing purchase, somebody doing marketing, somebody doing, and getting the data from their business, this thing. They are so much engrossed with their day-to-day work, their daily reporting, their weekly reporting, their monthly MIS. For them to expect to keep track of such things, I just refer some very small things. It may look silly, but the expectation is on these matters. One thing was referred to by Chitle sir also, was about significant accounting policy is now changed to material accounting policy. Standard wants us to do that from 24. What we have seen is most companies have only changed the title and then not gone into what is difference between the MAP and the SAP. Material accounting policy and a significant accounting policy. There, the standard is giving the guidance. Ind AS 101 is giving the guidance that whatever is material accounting policy, whatever are relevant to the transactions entered by the company, on that, those matters, or wherever the standard itself requires some more details to be given. For example, PPE standard requires you to give, you know, like original cost, carrying value, depreciation, rates of depreciation, useful life estimation. In those cases, you have to have a policy. As was mentioned, that wherever there is an option in the standard of following this or that, for example, the inventory valuation. There are 3 methods permitted. Which method are you doing? Again, you need this thing. And such things, policy, entire document will have to come based on whatever is relevant to the immediately following financial statements. Whatever is not there in a financial statement, and you are giving a policy in a detailed wording, standard copy paste, then that is obscure reporting. Whether are we taking care of that is kind of completeness. I'll go to completeness at this level. One another, many of you may think it's a foolish. Most of us, including some of my clients also, so you can blame me also. The cash flows are said as cash flow statement, the title. The correct title as per the standard, as per the Schedule 3 is statement of cash flows, not cash flow statement. And I mean, those who are looking at the quality can look up to this from this level. The policies to be, so for this again, one can never overemphasize the need for learning and development and need for updation. Of course, the knowledge is coming from all the way. Most of the developments of this kind are kept on the institute website. WRC website is also very, very alert, vigilant in giving such information. NEPRA has kind of whatever changes it wants in a financial reporting, whatever quality that it expects in a financial reporting, through their orders, through their circulars, they have put it on their website. This is something that one can see, one can update from sitting in one's own office. So therefore, compliance to all these requirements. Now here, where is the obstacle? Like if I change from significant accounting policy to material accounting policy, okay, who's there to pat my back? This is difference. When you are doing a tax work, when you are doing a GST or direct tax or something, some good change that you are making, immediately the effects are seen in the savings of the tax or a better compliance. In qualitative reporting, there is no immediate appreciation, immediate recognition coming to us. But then it can be appreciated that this is a journey. It cannot be done overnight. So therefore, it's a journey. You keep on have a quest for the qualitative reporting. Over 2, 3, 4 years, somebody is bound to notice, if you are in a public domain, if your financials are in a public domain, obviously some small companies are, immediately coming up for a review and all. I'll just give one example on a completeness and compliance of this thing. In a startup ecosystem that we are in, the promoters or the business is always in a crunch in the beginning at the nascent stage. And therefore, there is a pressure on the CFO or accounts to capitalize most of the things, because we are in a phase. We are working on an idea which will work great way. And therefore, you go on capitalizing left and right without bothering about the intangible standards, which has rules. Paresh Bhai mentioned about capitalization of the factory, plant, production. That's somewhat easy because there are standards or there are ways of working. But when you are capitalizing intangible asset, obviously there are some rules will have to be followed. Now when this startup thing has done this, it has grown up to the stage where it can go for investing. In the due diligence, the due diligence reports come out saying that all this is fake capitalization, these assets are not there, this asset is not worth anything, and then you fail at the initial stage. Now think of a reverse stage. Had I not done all this, I would have expensed out all these expenses and then go for an investing application or a pre. In the meeting with the capital provider, if I had said that, look at all in these expenses that I have said, my losses are so much, but actual losses would not have been so much had I capitalized some of this, which I am not capitalizing because standard is not permitting that. Otherwise, I have created something to use for the years which will generate cash flow for me. That submission would have been received positively by a capital provider rather than you are capitalizing something wrong and a due diligence report saying that this capital is not correct and therefore profits are not correctly reported. So, I mean, as I said, the rewards or a result for qualitative and a correct reporting are not immediate, but when they come in a bounty. And therefore, yes, please. I agree with you. Point I was making was for some short-term gain, compromising with a correcting or qualitative reporting, which will hamper your long-term objectives. That was my point of view. So on that aspect, I'll say compliance is rewarding, but in a subtle way after some time. And constant compliance is qualitative reporting will definitely reward, but as I said, immediate nahi hai. Paresh bhai, if you want to add on anything.
No, so I will just go on the process. How can companies ensure completeness and compliance? So basically, one needs to, because I'm sitting at a CFO level, if I would say that, have a kind of a register, say impact register. What are the items which we have under Ind AS? And make a list at the beginning of the year. Look at what transactions you have been doing. Are your transactions of a routine type, which you have done in past? No issue. Are there new transactions coming up? Altogether, new product line coming up. It may have its own challenges. So identify those and then see how exactly the accounting is to be done for a new product line. Suppose you are into manufacturing and you move into the service industry, service arena. Then you need your entire accounting process will change. So you will may have a new team, you may have an existing team which needs to be trained. So all these will also have to be looked at when I need to reach to an excellent reporting, financial reporting. And of course, how exactly, suppose if it's a new line of business or new line of services, what exactly peers are doing, how exactly peers are accounting. You have annual reports available of your peers, and then develop an accounting. And here I may say that we have observed public sectors, and as I mentioned earlier also, big corporate house. They are very proactive, for compliances as well as the completeness. I can give you an example, say even this, okay, we will take up example when we come to a little later. So, okay.
So here it is very important that mindset of the preparer and the capability of the team is very, very important from the point of view of the preparation. Now, as Paresh bhai said, for the large companies, they take care of these things, like educating, etc., etc. The problem when we encounter is when we do the audit of mid-size companies or small size. Mid-size also have a capacity to keep themselves updated of the changes happening, but sometimes they may ignore it. That is where I feel the role of auditor could be there, in the sense that we have been doing audit for last 2-3 years, so we know. Now, current year they have changed certain activities, like as Paresh bhai said, let's say you are into the manufacturing and suddenly you start giving services. Now, accounting of services under Ind AS 115 could be a different, when a bunch you are billing them for the bunch, then you have to segregate and accounting. So this requires a change. Now, if they do not know, then it's a duty of the auditor to point out that this is a new thing, so please explain how you are doing it, or how you plan to do it if they are in the process of implementing. So what is your view from how to enhance the competencies and how to change the mindset of the preparer? Azumga, your thoughts.
Preparers in an organization are often, say CFO or the team members of the CFO. The question could have been from the angle of the proprietors or the directors or the business persons. If their mindset is cultivated on the qualitative reporting, and how qualitative reporting can give you an added advantage, not compromising the long-term interest for a short-term benefit. If all this is done, I think the preparers can go that path. In this matter, I'll give one example which we all are like interacting in a day-to-day this thing. Tendency to report a stock higher than the actual stock remaining in my godowns or my factory is always there, because that's what you are reporting to the bank for a higher drawing ability. And that, of course, now there is a reporting on that by auditor also in Caro. That practice has somewhat curtailed, but it is not totally ended. But these are some of the examples which one can avoid for doing if there is an inbuilt SOP, standard operating procedure. Large companies, we all know, they have proper SOPs for everything. There are policies, there are procedures also laid down, and one cannot take exception to that. If one is taking exception to that, it will be noted at the reviewer angle, it will be noted at the approver angle, and if approver is also taking this, it is with the approval that this has been done with a reason. But otherwise, if SOPs are, if organization is built up like, it is driven by policies and procedures, in that case, the chances that you are taking liberty for a short-term this thing are not there, because you will be following a procedure, you will be going driven by a policy, and that is, I think, the key difference or the difference between qualitative mindset and other mindset.
So that has to come from the top, so the board level or promoter level.
It has to be cultivated, it has to be convinced that, like this is long-term interest of the organization.
Yeah, fully agree with Hasmukh Bhai that it should flow from the top. Once it flows from the top, if your mindset to maintain a quality in every aspect, that will flow even to the accounting. So once you have that mindset, everything else will get into place. A culture, you need to have that culture. Once an organization head, promoters have that culture, that this is what my accounting will be, this is what my reporting would be. Yes. No, we have, I think Nikhil Bhai has devised some questions which we will deal with when we come to AI also. But here what we are saying is a preparer mindset. If I need a quality, like Hasmukh Bhai gave an example, cash flow statement or statement of cash flows. Now, if you are at that level, then every accounting aspect, every line item, every disclosures, if your mindset is that, no, I ought to be doing this, that's it, full stop, then everything will flow. That is what trying to say. That is what a culture is there, and that is how you learn. You create a learning culture within your organization, and then things move. Of course, ethical behavior as even accountability, which Chitle sir mentioned. So once you feel accountability and a kind of fear also, that if I do wrong, I have consequences. And that kind of a mindset is there, then the preparer will obviously prepare an excellent financial reports. Thank you.
Yes.
See, so to excel, you should have that attitude that I want to excel. So if something new comes, let's say you have applied your own mind as a preparer and you have done in one particular way. Then after the year ending, when you look at the financial statements of others, when you read it, sometimes you yourself will realize, say for example, drafting of particular notes or accounting policy. So when you read somebody else's financial report, you also can come to the conclusion, these wordings are better than what I have written. In that case, in next financial year, you straight away improve it. So what I mean to say, sometimes you have to learn from the mistakes of others, sometimes from your own mistakes, sometimes with observations. So here, as a preparer, my question is whether how we can learn, particularly when issues are raised by FRRB as well as NAFRA, particularly in the recent few years. Hasmukh bhai.
But there is a very famous saying, learn from mistake of others. You don't live long enough to make all of them by yourself. And to be able to learn from mistake of others, both FRRB and NAFRA is giving you a ready stuff. Just open their website and read those reports or read those findings of FRRB. We would know what should not be done, what should not be done in the manner it is done by somebody, and those who are facing those actions or those who are facing those inquiry from the FRRB, etc. So like if one were to just say there are these errors or this kind of a reporting, two different types broadly. One are intentional, others are genuine errors or judgmental errors. Very, very difficult to make a distinction of these two, very easy to define them, what is intentional and what is genuine error. But just to, if one were to give examples of where the following the qualitative aspect, you are likely to be challenged, your mistakes are, your judgmental errors are likely to be drawn and told to you, which are those? Like number one always comes is impairment of the assets. Promoter and business person would always like to keep impairment at the minimum without actually going into the facts of the matters. That is always, like your judgment is always like to be questioned on that matter. A recent example of NBFC audit we noticed, Ind AS is applicable, so stage 1, stage 2, stage 3 in the manner Ind AS 109 says. You have 30 DPD, you have 31 to 60 DPD, stage 1, stage 2, and anything going beyond 90 is stage 3. And accordingly, your provisional, you have an ECL model very well written, rather copy pasted from some good company, and approved it by your audit committee also. But then what is conveniently always forgotten is, apart from days past due in case of loans and recovery, there are qualitative aspects, there are qualitative matters to be seen. And are we seeing that in a timely manner so that we build up our provisioning in time? So some loans, some of my loans I know are 0 to 30 days, and therefore provisioning will be as per that stage 1. But have I seen in some of the products something is going wrong, in some of the geographies there are some challenges? Say a bulk of my small ticket LAP loans, that is a product, is against property obviously, is in a area where the major income is tobacco growing, and tobacco growers are my borrowers. And there is a market which has suddenly fallen for the tobacco, and those tobacco growers are finding it difficult to sustain. From where will they pay my EMIs? And obviously, presently I am seeing 30 days DPD, but ECL by name itself is expected credit loss. I have to expect the loss which can come, and I know my borrower's profile is there with me. I know. Am I taking those qualitative aspects in this thing? So therefore, impairment provisioning is always, it's a difficult, and it is a judgment which is likely to be challenged either way. If you make X, you will be questioned why not Y. If you make Y, why not again Z? So whatever estimates and judgment you are making, have your homework ready, have your reasons ready, have your rationale ready, properly documented, vetted by a reviewer within the organization. In large cases also, blessings of the directors or the independent directors, all this will help you from a possible questions. The other example that I can cite is, in case of merger acquisitions. Now, merger acquisition decisions are taken by the business persons. That time, perhaps CFO or accounts people are not even party to that. So they do not know what are we paying for. When you buy an entity, lock, stock and barrel, you are paying an X price. If that entity is a listed entity, obviously you are going by SEBI formula and determining some price which is part of the negotiation table. The business person sees a future prospect in the business of those assets and those lines of business. But when you are accounting for that acquisition in your books, the problem comes that the net asset of that business is not even half of what you have paid. Then what do you account for the balance? So much goodwill is not liked by either by bankers or by analysts and even by business persons. Even by stakeholders also. Yeah. So then the tendency is always to, what sir said, creative accounting. Creative accounting may, okay, anyways we have paid high, so now get some asset. They have a customer contracts, they have a customer relationship, let's capitalize customer contracts. Let's capitalize distribution aspects. If there is some brand in that business which I have acquired, they are not valued, let me value that brand. And then you go into this kind of judgmental matters. Of course, valuation and all has to follow. But these are some of the areas where your judgments can always be questioned. So impairment of the asset, merger accounting, ECL model, full of judgments and estimates, classification of the assets, sometimes also your judgments can be questioned and you will be in a difficult situation. These are some of the examples. There can be many. If one reads FRRB publications which are issued every year with a fresh listing, one would know. And again, what I am saying, learn from the mistake of others. Paresh bhai.
Yeah, so not that I have to add much, but I will just for the members here that FRRB has, as Hasmukh bhai rightly pointed out, time to time come up with a good volumes. There are volumes which are there under accounting standards. So those who are not into, Ind AS financials preparation, but AS financial preparations, they can also look at those volumes. There are 3 volumes for Ind AS, the latest being published in 2025. And very clearly they take you to which Ind AS it applies to and what exactly the Ind AS says and what exactly the disclosures are made or the accounting treatment is given. So those are superb documents, and these reporting or errors, common errors as they call it, have been noticed over a period, and they have been examined by seniors in profession and then worked out. And they are not more towards the auditors, it is more towards the financial reporting itself. And therefore that is the documents which we have to look at. Similarly, examples of revenue recognition. Revenue recognition, as Hasmukh bhai rightly pointed out, in a real estate industry over a period or at a point of time, accounting, that is your percentage completion or a project completion, how exactly it moved from AS to Ind AS and things like that. So there again judgments are involved, again lot of law is involved. So one needs to look at these examples, and there are ESE opinions. Now all ESE opinions are also under Ind AS. And again I'm saying it is not from auditor's perspective, it is from a preparer's perspective. It is preparer who goes and raises query of from the institute, because the institute who opines on accounting treatments. So those also are the documents which one needs to refer to. Yeah.
Now further to these, recently NAFRA has come out with a circular where they talk about accounting of interest. Now I'll just give a background why this has come. Like not all preparators, now if you are going through the financial difficulties, you have borrowing from the banks, financial institution, you have not been paying, and your account or your loan account has been classified as a NPA by the lender. You are the borrower and you are preparing your financial statement. Lender is classified as NPA. So the preparer of a financial statement, what he says, they are already in negotiation for some remission of interest, some further time period allowed for repayment of loans, etc. So considering all these things, many of the preparers have not accounted for the interest during the financial year, because my account is classified NPA, other side is not accounting it as an income, so why should I account as an expense? So on that, NAFRA has said no. Till it is officially, they have given you the concessions or they have written off your amount, till that time you also cannot write back. So you have to continue to provide for the interest. Now, maybe from the business point of view, when I'm not going to pay this, why should I increase my losses, interest? I have to then otherwise reverse. This could be the reason. So how do you view this? This is a conflict between maybe the business reality and the accounting requirement. No, I agree, sir. I agree, sir. See, you account as accrual, so TDS, etc., all things comes. But if you purely look from accounting angle as well as you look at from the Ind AS angle, now there is no change in the terms of my borrowing. So I should continue to what I had signed on the dotted lines till we revise the agreement. So this is what has come out. So these are some of the challenges what I am saying. So what is your view, both of you? Interest income accounting.
NPA borrower not recognizing the interest.
Interest income, right, sir.
No, I don't know. This is again a creative accounting. I am the borrower. I have entered into a contract with the lender about payment of interest and EMIs from time to time. Now I am making a default. Okay, I am an NPA in the books of the lender. Lender has stopped recognizing income or recognizing income in a shadow account or say not doing this. But so long as lender has not agreed to give me some kind of settlement, how can I not provide an expense in the nature of interest, which I have myself agreed that I will be paying it regularly? If I am not paying it, I have at least to provide it. And non-provision of such rightly picked up by NAPRA, and therefore circular is also issued by NAPRA after that inspection of that company, that this is a wrong practice. You should actually be providing for interest, even if you are not, your financial position is not in position to service that interest, paying that interest in a timely manner. In fact, I would go to one extent further, that if your agreement, loan agreement was saying about additional or a penal interest in case of defaults, you should be providing for that also, because that also is an accrued expenditure, and the accrual of that is happening the moment you are making the default, and you know you can actually quantify that how much is that. So the obligation is to provide that, and non-provision of such thing is not correct, and therefore this circular of NAPRA, it's properly accepted by all stakeholders, and I'm sure most of us are now complying with this aspect. The other, yes sir.
Sir, I want to say, I don't provide, that doesn't mean that he should not provide. I am a receiver, that I don't see, okay, but he has the responsibility of making the payment. So he has all the reasons to provide.
Exactly.
Irrespective of my intent.
Exactly.
So I want to say, no, he is not provide, why should I provide? No.
Sir,
That
sir,
is absolutely fundamentally wrong assumption.
sir, creative accountants ask the question, there is a standard, accounting standard for revenue. Where is the accounting standard for expenses? Which standard tells you that expenses should be immediately provided as they are accruing? Now this all is there, sir made a mention about framework. Framework mein ye sab hai, and standard is something, like I have to tell you to do something in a proper way. What is not proper way, all that is there. But I don't have to tell you to get up in the morning and take baths, brush your teeth and all. I don't have to tell you that. Those are as normal. Providing for expenses is like that only, sir.
Fundamentally inbuilt principles of the life.
Exactly.
So
Exactly.
Asumbai, adding to what you said and the question which Nikhil raised, basically Nikhil raised a question which gentlemen there also had raised about startups, because everybody wants to look their financials better, or rosy picture. Even you are making losses. You bankers, your lenders have declared you NPA. But if I were a businessman and I'm sitting on this side, I will have these ideas. But again, coming back to the mindset, my obligation does not change. As you have rightly pointed out, the obligation, my responsibility to pay, my obligation to pay that interest does not change till everything is settled. Okay, and therefore that interest accounting ought to be done. And such kind of issues do come up. But again, I will go back to your earlier question of the mindset. That I want to represent what as a businessman I will represent. Today it is my obligation, and that has to come and sit on my financial reporting.
Document to pay. I cannot say no, I will not provide
So,
because I have to sign. I have signed the document, so I have to present. I have to provide.
I'll tell you the case which resulted into this circular. The party was arguing that I have already made a submission for one-time settlement, for like compromise settlement, and we are hopeful that it will be given. Based on that, I stopped providing interest is something Then ultimately it was not.
When you change your accounting system, only when you get there.
Exactly.
No, sir, so we are not specifically on this example. This is one example. But we are trying to drive a point home is that as a preparer, there could be so many challenges which will come, but you would be looking at it, how exactly my mindset is there, how do I take those judgments? If I have those judgments, what assumptions I have taken, say useful life for an asset, how exactly, if it is different than the what is provided under the Act Schedule 2, then what are the judgments, why did I make that judgment? All these challenges which we come, one will have to document those assumptions. Also, as Hasmukh Bhai pointed out, discuss with the audit committee chair, because that is how, and in fact, since we are sitting on audit committees and things like that, I know that, well in advance things come to us for discussion. And that is what a preparer should be really looking at to get into an excellence in financial reporting. And at times, external validation also, some experts' view on the matter or the assumptions which we have taken.
So, in a way, these are the flags. So, when you
If
want
matter-
your financial
Just to
statements,
respond. If matter is such, yes, take writing in this thing, yes.
Yeah, written opinion is the always.
It's always, if matter is such, do that, because you know that you will be questioned on this in future. You have the weapon ready.
no, so what we were discussing, how we can prepare our financial statements in a better way is that, not that every time all the clients are facing financial difficulties. Now that the circular is that, so we have to keep it at the back of our mind that unless other parties has agreed as per Ind AS, there is a requirement, unless it is fully on a dotted line, it is signed, till that time I have to keep on accruing. Then I cannot say that I am most likely to get the concession, etc. So that should not be a argument with your auditor for not accounting, etc. So this is how you can improve your financial statements.
Nikhil bhai, when we are on a NEFRA, learnings from NEFRA circulars,
Absolutely.
one aspect is this, another aspect again very nicely brought out by them, the asset in the form of trade receivables. Now, I think when perhaps in the ecosystem of IFRS in Ind AS, we were obsessed by the term fair value. So everything fair value. So many used to say that are fair valued. At fair value. Trade receivables cannot, initial recognition of trade receivables, if there is no significant financing, component in the trade receivable, it cannot be at fair value. It has to be at a transaction value. Such an obvious thing has to be brought out by NAFRA in a circular.
Hasmukh bhai, you permit me, I will read what exactly the circular says, because it's very interesting. NAFRA is in short said, what is an inconsistent accounting policy on financial assets, which is initial recognition and measurement. All financial assets are recognized initially at fair value, plus in case of financial asset are not recorded at fair value through P&L, transaction costs that are attributable to the acquisition of financial assets. These include trade receivable, cash and cash equivalent, other bank balances, fixed deposit with banks, etc. So what Hasmukh Bhai pointed out, no, even the trade receivables were referred to as at fair value. Similarly, at the same time, they had said on revenue recognition. Same issue came up for revenue recognition. This is inconsistent policy. I will now say what is a correct policy as far as the financial asset is concerned. All financial assets are recognized initially at fair value plus, in case of financial assets not recorded at fair value through P&L, transaction costs that are attributable to the acquisition of the financial assets. However, trade receivables that do not contain a significant component are measured at transaction price. What has happened that we have always assumed that if there is a financial component, then you say it is at fair value. No, it is only to compute the transaction. That is how it has been done. And similar situation they have reproduced what is an inconsistent accounting policy and what should be a consistent policy. And as regards, correct policy as regards the trade receivable as well as revenue recognition. That's a excellent circular. And what I want to say that this would apply in, of course, Ind AS, but certain concepts which are there would apply even when you are preparing
Yes.
a financial statement under accounting standards.
Yeah. So these are the ones, while preparing, sometimes if you have a doubt what could be the correct course or correct judgment how to apply. So if you cannot find somewhere else, then these are the circulars, judgments of FRRB, judgments of NAFRA. These are the guiding posts. So if you read this and convert that into the situation, how it is applicable to you, and then apply to your financial statement, and this will lead to the excellence in the financial statement. That's what we are driving the point. So how do internal teams coordinate to avoid repetitive observations or the scrutiny as a preparer? What system they should have?
No, so basically, as a process only, there should be an internal communication, which department is involved, etc. That is your question is coming. Now, for related party transaction. Now, secretarial department has more hang with the related party transaction than probably even an accounts team. So that coordination between the secretarial team and accounting team ought to be there. Sometimes there is a sales negotiation which is happening at a level of sales team with a related party. Then your sales team is involved, your secretarial team is involved, your team at accounts, finance is also involved. So the coordination of certain transaction, you have to identify the transaction, identify the nature of transactions, related party, and then see how exactly things move. In fact, I was just on AI, which we will discuss later also, but we will have to speed it up as well. I was told today that there are kind of tools being made even at the transaction level. Suppose if you are entering a lease agreement, then at lease agreement level itself, when you are entering that lease agreement, that PDF when uploaded or things like that, then what could be the disclosure, what could be probable accounting, etc. Also these kind of AI tools could be developed or are being developed, I'm told. So that's the kind of things which we have to really look at.
So from practical point of view, RPT is the one area where NAFRA has been making very observations. Now here, as you rightly said, secretarial department is involved, maybe to an extent, company secretary is involved. First time at the board level, all the directors, they have declared their entities where they are interested. Now this list may not be there with the accounts department or maybe purchase department, etc. So this coordination, how it can be done? Hasmukh Bhai, what's your view?
In the beginning, I mentioned about the preparers working in a silo, devoid other business, this thing is not an ideal thing. Entire business team should be working as a team, and there should be a vibrant communication between this for each transaction. Routine transaction, one doesn't require a very specific communication, just an information which can flow from the system also. But if a transaction is other than routine, something like a takeover of a company, takeover of a running business, or such matters, related party as you mentioned, some related party transaction which is not normally entered into. You are a part of the group and you are paying brand support fees to your parent or brand holder. That is not normally done in a normal way. So therefore, all such requires a proper communication inter-department, and that's what I said in the very inception, that very vibrant communication and rapport between the business, ops, secretarial, sales, marketing, procurement, and accounts department. Then only this can be done in a qualitative, proper way.
And therefore, the role of CEO or MD which matters, who is more or less well versed with what is happening. And it's not that MD who is technical does not know all these nuances. They also know, and that is a powerful MD. So at a preparer side, it is not only CFO, even the MD, CEO do have to play a role. And when we, if I sit on the other side of the table as an auditor, we do have discussions with CEO and MDs also, as occasion demands.
So as a preparer, particularly from RPT point of view, as we know that under the Companies Act, the first board meeting of the financial year, all the directors disclose their interest, and that particular form also gets uploaded on the ROC. So from company secretarial point of view, every financial they should prepare the list of these related parties, because last financial year related party might have undergone a change. So every financial year you should have this. That is first thing. Secondly, in between, suppose there is a change in director, somebody's tenure has over, new one has come. So he will give his interested parties list in the first board meeting he is attending after appointment. So those amendment. Secondly, during the financial year, he might got interested in some entities and he is disclosing that to the board. So those updation also should happen. So basically a proper coordination is required between secretarial and accounting department. So once they have the list of parties, then then the question comes to knowing that, oh, I have a transaction with these parties. And then correctly RPT will be reported. And now, as you know, all RPT beyond a particular threshold requires approval of the audit committee as well as board. But if you are a listed, then you have the norms, 10%, 1,000 crore, whichever is minimum, etc. So from the point of view of compliance of LODR also, it is very, very important. So we need to have a proper SOP now. And also, if, as a preparer, if you have documented, it will be easier for you to convince the auditor that these are the only parties and these are the only transactions, and it is easier for the auditor also to get that verified.
Only a minute, I'll just add, since we were on related party disclosures, the SEBI LODR regulations going beyond accounting standard definition, beyond company law definitions, one will have to be careful, though this is not an accounting standard subject, but I thought I'll draw the attention.
No, fine. And then I will just then take up that when we were on NAFRA and related party. You know, NAFRA also has come up with series. See, I would not like to go into the nitty-gritty of a transaction and discuss that. As a preparer, what you should be looking at. NAFRA has now come up with 3 series. One is on ECL, second one is on deferred tax, and third is on related party. That is mainly the communication which audit committee should have with the auditors. Please remember. So, you know, why, I mean, just one line, the background has been why the auditors the scapegoat and not what the audit committee is doing. So NAFRA has now instructed and come up with certain series, as I mentioned, which which of course translate what is there in the standard, but audit committee should be asking those very much questions to the auditor. So now the preparer roles comes, preparer, audit committee chair or audit committee per se, and the auditors. So audit committee also should make efforts in advance to ask the preparers that do you have all these answers? Do you have all these answers from the auditors also? So this is a very good 3 series which has come up, and I believe there are 3 or 4 more will come up, and the related parties, the recent one and the most comprehensive one. So these are the documents which as a preparer you should be hands-on.
Now that we see that as a preparer, sometimes size of the company is very big, and today most of the accounts or many transactions, even your transactions, banks, everything is through digital mode, etc. So what could be the role of technology and AI in compliance and as well as the completeness of the financial statement? Hasmukh bhai.
Actually, today's world, like the timelines that one has, which Nikhil bhai earlier mentioned, very limited timelines, huge reporting responsibilities, all this to comply, and complying them without the help of technology, one can't even think of. But then we are now today talking about some of the additional tools which one can safely and easily use for in their day-to-day work, in their day-to-day compliance, in their day-to-day analytical part, which can give a very efficient and effective aid to the preparers for timely, correct and accurate reporting. Therefore, this aspect which cannot be ignored, but when we are saying this, what was said in the opening session needs to be remembered. When we are saying artificial intelligence, it is artificial only. It is intelligence only if our original intelligence or emotional intelligence is in place. I always say this to my clients and my assistants also who are obsessed with AI tools, ChatGPT, etc., that all these are good servants. What we say for fire. All these are good servants. Do not allow them to be your master. Otherwise, you will ruin yourself. Your work also will be, you will do so much thing and will not reach anywhere. So therefore, very, very intelligent, very objective use of AI is something which is need of the day, which will take us to an accurate, correct and compliant reporting. Lot many things can be, given properly to the Power BI or a ChatGPT tools. I would read some of the tools which are widely used by our clients, though I may not be very proficient on that, but I have been beneficiary of the output of such tools in course of my audit, so I would read it later after Paresh bhai also talks about why and how much, to what extent we go for automation wherever possible. Please do it, and intelligent use of it.
Power is gone. Power BI is there, but power is gone. Okay. Yeah, so large volume results in AI. Now, how does one look at this AI? So there are quite a few things which can happen. A lot of things can happen. What I understand and have recently reviewed, discussed, even your line items which are there, now you can create a draft financials also through AI. So you upload the draft financials and AI will compare with the framework what accounting standards, treatment is there, disclosures requirement. As I mentioned, to a stage where you upload the transaction, upload the lease agreement and everything will that what are the disclosures. So you upload the draft financials, we'll compare with framework and reporting requirements and point out all lapses. So what needs to be complied, what not need to be complied, or what is not complied, all these also could the end results when you use AI. Upload the transactions I just discussed. Then cross-referencing of notes. You know, that also can happen automatically. Today, cross-referencing, say a related party transaction is there, that legal expenses paid to related party is there. Now, that cross-referencing disclosure also is to be done that AI can do. So there are multiple things which AI can do. Tally the amounts of your reports, your sub-schedules. Many times, you know, you look at Excel and just see that link is there, and you have missed out the link for one, instead of one row, you have inserted another row, and at the last minute, the financial gets uploaded. But AI can ensure that this is also done. So, as I said, many entities are trying out AI at consumption level by promoting GPT products yet to evolve. So there are a lot of products which are coming. Transaction level, as I discussed, that transaction level also AI can be used. So as a preparer, more and more use of AI if you do, I think really it will give results. Yes, it has its pitfalls, but pitfalls are not as many as made out to be. And really, I'll just crack one joke also, but that is in a favor of AI. You know, and I had mentioned last week itself, I was preparing my PPT. In fact, these few of the questions, I pull it out from ChatGPT only. So when I was working on one presentation earlier, and then I was a little tired, so I said, chalo, kuch masti karte hain. So then I asked ChatGPT that you please draw a picture of Amitabh Bachchan for me. And a question came. You will have to put a photo of Amitabh Bachchan, then we can do it. I said, I don't have a photograph. But remember, note that when I refused to give a photo, it still gave a picture of Amitabh Bachchan and as Amitabh Bachchan. Okay? So, for the information available, the data available, Amitabh Bachchan could come. But there is a twist here. Then I asked, please draw a photo of Paresh Clark. It refused. That you are not so much well-known entity or a person, so we cannot draw your picture. So it is an advantage as well as disadvantage, but we are all human beings. We have our original intelligence, which we use. We don't use even Apple intelligence, but we use our own intelligence to use AI. That is what I would convey.
So, Pareshbhai, in a big organizations or certain kind of like fintech companies where digitalization is to such an extent, digitalization as well as computerization, where you have to use AI as well as computer-aided tools. But do you think from your practical exposure that it's good for mid-size and even for the small-size companies?
See, upon a time when computers came, everybody said that how a small firm can afford, or an audit firm or a company can afford so many computers, etc. The time has gone. The volume has so much increased that you have no choice also. Yeah. So, and things will evolve, things will become not as costly as it appears to be. And the advantages are so many that at times when you are using technology, I think you have to give some concession for not bothering so much on cost. That's my view.
True.
And I strongly believe that.
Just to add to this Nikhil Bhai's question, Nikhil Bhai, I personally and strongly believe that more than large entities, mid-sized entities, small entities who are growth oriented should look at all the kind of automation for three things. What is the challenge with them? They have challenge of manpower.
Right.
A lot of manpower can be done away with if you are doing a smart use of this. Leverage a technology to possible extent. Okay, you are not in position to afford a very high toned ERP like SAP or like Oracle or something. But these tools are available to you already. You already have Microsoft. With that, Microsoft Copilot comes. You are not paying anything for that. Use that.
But then,
So all I'm saying is accuracy, timeliness, completeness.
Yeah,
All
it-
these objects can be properly obtained from the technology. So some of the products, as I said, like which are cost effective or virtually no cost. Microsoft Copilot I already mentioned. Many of us are already using. Some of my young friends here would be using it. AI reporting assist. Then RPA is one of the popular amongst the mid-sized large companies who are preparing financial statement. Robotic process automation. Now this tool is very, very useful. This is what I hear from my assistants or my clients' persons, that they are using it extensively. It has saved hours of working to within few hours they can complete number of days work and analytical tools. For compliance, some of the tools are Jan XBRL, ClearText, SEBI BRSR. All these tools are available at virtually reasonable cost. Then bots, Copilot Studio and Azure GPT. These are also one can explore properly. Okay, initially it will take some time communicating, giving the prompt management is to be learnt, and thereafter you will see that benefit of using this is much more. More efficiency,
hello.
more accuracy, more timeliness.
But-
when mobile came, we don't know things, "Arey, who will use it? Who will pay this bill?" Now it is free.
I'll
So,
just.
so cost is only a hurdle in a mind. After some time, it'll get.
When the volume increases, all this becomes insignificant.
yeah, initially it was a 64 rupees a minute.
I'll just
And
take,
now it is-
I'll just take one more example, which I think Institute also has. Because I'm slightly using, so I'm just kind of advocating. Any audit is another tool, which is also a good tool for audit perspective. But they have any financials, which is under pipeline, and they would come up with. And there they are using AI, where what objectives which I narrated, those also would be achieved. So any financials also is one tool which one can always see when it comes out. I think it is expected to be out in July.
No, our institute also is organizing so many training sessions for the AI tools, etc. But again, as a red signal on that, how we should use it and what should not be delegated to AI.
See, you should be using AI. I mean, there is no second option.
Correct. To what
Okay.
extent and on what things you should not rely on AI?
I think you should rely on everything. If in medical profession operations can happen,
Through robotics.
robotics, somewhere AI is in one form or the other being used. So I'm not saying that you don't use or you use in that area. As it gets evolved, as more and more tools come, I think you sit here and get financials done. I mean, I would look at that
One
way.
thing I want to tell you, the risk is in our mind. It is not physically, practically to stop it. And it will take over the world. Maybe humans are there, that intelligence is very much basic. They are not our masters, they are our servants. But we want to stop it.
No, correct. We cannot stop using it, but as Chitle sir also rightly said, eventually when it comes to decision making, human mind is more intelligent than any of
No,
AI
Nikhil-
tools. So
Nikhil,
we should
fair-
not stop
Nikhil-
using that. That's, I
Nikhil-
feel, is the
Nikhil
only.
bhai, fair
pitfall.
enough, fair enough. But why do we want to stop today? Why do we want to ask even a question to what extent we can use? We should use it to the fullest extent.
Correct.
And then see where the hurdle comes, where do you want to stop?
I need to take his
Because
open
I-
opinion.
if I'm
If I need to take his open opinion, just go ahead.
If I'm,
Correct.
sir, so I'm sitting.
I
at
request
a-
all the participation, we can have offline discussion also. Let them complete the panel discussion first and then we can have.
So if
offline.
I'm sitting as a preparer, I want to use it as best. As an auditor also, I want to use it as best. Why not? Yeah.
Now, all these times in excellence financial statement, we were talking about the quantitative, figure-wise. Nowadays, there is a change, and we are moving more towards non-quantitative numbers, like continuity of business, BRSR, ESG. So, how does it will help in preparation of financial statement from that point of view?
AI, you mean?
No. In excellence financial statements, now we are moving other than numbers on how we will have a continuity of business. So we have now BRSR is evolving, which is initially applicable to certain number of companies, and slowly it will percolate down to all the listed companies or maybe non-listed companies also. So how effective that could be or useful that could be in excellence excellence of financial statements.
No, so, excellence in financial reporting, as you may be aware, that the institute comes up with many awards. One is the financial reporting, and institute also has installed BRSR reporting award also. Those two are not mutually exclusive. And over a period, you have non-financial data through BRSR. Now a concept of integrated accounting also is coming up. And most of the large financials, if you read their annual report, then you will see that integrated reporting also is being done. And then you are reading your financials through your non-financial data.
Yes,
Or
like
even,
MDA.
I would mean vice versa. So, things are moving for sustainability for sure, and therefore your financials or non-financials will definitely give an edge to any reader. In fact, I would say that even SMEs, etc., a time has already come whereby large organization will not have an SMEs supplier who is not getting into the sustainability markings. So all these is happening, and therefore I think non-financial reporting will definitely enhance the value of financial reporting per se with integrated accounting or integrated reporting coming into play.
Actually, time is such that market, analyst, shareholders, stakeholders, government, everybody looks for an organization beyond numbers. They want oversight into the future, into how the natural resources are utilized and preserved, into how savings in terms of electricity units, etc., are made. This is going beyond, much beyond business reporting, much beyond financial reporting. And if this reporting, what we call narrative reporting, narrative kind of, MDA is something which is regulatorily mandatory, BRSR is becoming mandatory. All this can be integrated, financial reporting, MDA, BRSR, all this can be integrated into one reporting where numbers part is there, but information is given beyond numbers into future, a peek into future, without of course getting into the giving of the guaranteed future, etc. But all this is now requirement, now demand of the stakeholders, and therefore companies doing it very well are scoring higher in terms of market value, in terms of share price, in terms of acceptability, higher than the other companies who are not doing on narrative reporting so well. This is my take on it.
Even international investors are looking at your reporting, your sustainability markings very well, because internationally this is a thing.
Yeah, so stakeholders are looking from the point of view of how you are not disturbing the earth environment, and accordingly they are giving more weightage to that. And maybe from investor point of view also, they would like to invest only in those companies and industries which is contributing towards preserving of the earth.
And there also again walk the talk.
Absolutely. Like you must have seen in some of the financial statement, commitment statement that in next 10 years we'll have only a green electricity, will not be emitting, using the coal, etc. kind of electricity, and everybody is working towards that. With this we are done. I mean, we are open to take questions if any.
Yes, please. You say the tools?
Yes.
So I mentioned about Microsoft Copilot, which many of you I believe are using. That also has a tremendous utility and possibilities. The tools which I read from here are given to me by some of the client personnel, some of my assistants who are doing it. Data analytical tools, dashboards, Power BI, Tableau, etc. for narrative reporting, as well as now cloud solution like Zoho, Financial Plus. This thing is also, like those who are using ERP and this thing, they will find this useful. Robotic process analysis, as I said, RPA is very, very widely used. The AI reporting assist is also very good. There are some readily available prompts in that for some of your requirements, so that you don't have to work much on giving a prompt to this GPT. Microsoft Copilot, along with GPT in integration, is also available. Of course, for that I think something has to be paid. I don't know how much, but that is also very useful, this thing. For compliance reporting, etc., General XBRL, ClearText, SEBI BRSR, all these tools are available on a Microsoft phone also. And the bots, Copilot Studio, Azure GPT, these are also widely used tools as part of AI.
And per se for financial reporting, quite a few tools are evolving also. So when you are looking at financial reporting perspective, you will have few more tools which would be in public domain.
And just before our session began, somebody on behalf of WRC mentioned about WRC's initiative on like AI, this thing. Those tools I think are available, isn't it? To
Right,
all.
sir.
And
Right.
those are also very useful. Those who have used it in my office, they are saying that extensive use of this can make our work easy. Yeah.
Okay. So, what a fantastic discussion we had just now, and I'm sure you all must have learned a lot from this experienced panelist. So it's my honor and privilege to extend a heartfelt gratitude on behalf of WIRC for this today's panel discussion, very insightful and enriching discussion on financial reporting excellence from a preparer's perspective. So really thank you so much, Paresh Clark sir, Hasmukh Dedia sir, and Nikhil Patel sir, for accepting the invitation and agree to be here with all of us today. Sir, your practical perspective, deep domain knowledge, and thought provoking inputs truly enriched the dialogue and helped us to understand the evolving landscape of financial reporting from even those who prepare it at the ground level. Really, thank you so much once again. We will keep calling you at WIRC. It's really a privilege for all of us to have you today here. Thank you so much. So with this, we are closing this panel discussion here, but we'll keep continuing this discussion after the lunch break. So 45 minutes lunch break is here. Thank you.
Just I will end with saying that on a Teachers' Day, when the students become teachers,
Yeah.
on today's accounting
Accounting
standard day,
standard
we
day,
auditors
yes.
have become proper CFO. I think you would acknowledge that. Thank you.
Good.